So this is an introduction to me lecturing and putting you through on how to trade following my analysis. Like I said, I use the top down analysis. I'm not a day trader, I'm a swing trader. What is swing trading and day trading? Before I start, there are two types of trading. We have the day traders and we have the swing and position traders. Swing trading is you enter a trade today and you leave the position open for, let's say, a month, 2 weeks, a week, and several days. While day trading is you open a position today. Let's say you're buying let's say USD CHF, or you're buying Euro USD. You enter a buy position today and you close it today, maybe in profit or at loss. You close it today. That is day trading. While scalping is, the thing was called scalping is you opening position and closing it almost, let's say, within a 5 minute interval. You go to the 5 minute time frame, you open a position and you're looking at it like you're steered to your system. Whenever you see, let's say, a little bit retracement, boom, you close it out. So that is what we call scalping. While on my side as a swing trader, my own is just to open a trade today. Today is Tuesday. I might open a trade today, like I have a position open since last week. So if I open a position today, I close my laptop. I don't need to be in front of my screen. I have many things to do. I close it and I go and do other things. In as much as I have identified my risk, let's say I'm on $100 account and I'm risking, let's say, $20 to make 50, then I identify it, move my stop loss accordingly, then move my take profit. My take profit could run till maybe, let's say, 5 days time for it to reach. I'm not bothered. The thing is, the market moves like a wave. It goes up, come down, goes up, come down. That's what you call an uptrend. While a downtrend is from up, it goes down, it come up, it goes down, it come up, it goes down until it gets to a support level where it's going to turn back to a resistance level. Resistance is up, support is down. Once the market breaks above a resistance, that resistance becomes a support. Just like you have a ceiling and you have a floor in your house. If you break your ceiling, you are going to be, when you break your ceiling and enter, you are going to be stepping on that ceiling. That needs to become your support, while the thing facing you will become your resistance. That's how it's all about. So my analysis is very much from the higher time frame, from the 3 months or the 1 month. I identify where the trend is. Is it trending up or is it trending down? Once I identify this, I go to my weekly time frame. There's what I call weekly time frame. Weekly time frame, one candle of a weekly time frame represents a whole market, a whole weekly trend. The market movement for that week is 1 week candle. So likewise, a daily candle, everything for that day is just one daily candle. If you go on a daily time frame, if you go on a 4-hour time frame, how many 4 hours makes a day? That's how many candle you see. You go in a 5-minute time frame, you're going to count how many 5-minute candle. Each candle represents that time frame. Let's say you are in a daily time frame. One full candle close represents that day trading session for the whole day. So what I do is, after analyzing from the higher time frame, I go to the weekly where I plot my key levels. There's what I call key levels. This is where I plot my support and resistance. Let's say the market is going up. I've seen it from the monthly that the trend is up. Then I go to the weekly time frame. I identify the immediate trend on the overall trend. There is an immediate resistance and then there is an immediate support where price will bounce up, go hit and come down like that. So this is where I'm going to map it out. Once I map it out, then I go to the daily time frame. After analyzing, knowing my support and resistance on the weekly, I go to the daily time frame and look for where price is at the moment for that week. This is where I map out. There's what I call minor support and resistance on the daily time frame. It is inside this minor support and resistance I'm going to be trading. This is where I want to know, okay, should I start going short from here or should I start going long from here? Once I identify this, I go to the 4-hour chart. The 4-hour is where I just pick my entry. It's just go there and say, okay, if I'm going to buy, I want to see a 4-hour candle close above this level. Once I see a 4-hour candle close above that level, then I start buying. Once I buy, I move my stop loss accordingly. If I'm going up, if I buy on the 4-hour chart, I move my stop loss, I risk a daily candle. To make 5 daily candles, which means I'm risking a day worth of trading, previous day worth of trading, to make 5 days more, or a week more, or a month more. That's how it is, depending on where the market is. If the market have reached a major support and is about to turn, this is where I can hold trades to up to a month or 2 months. But if the market is in between, let's say it's closer to the support and I'm selling, I want to just sell from there until it hits the support, then I will hold the trades for, let's say, 2 days, 5 days, and thereabout. So this is just an introduction. I'll go back to my screen where I'm going to be showing you how to map out these levels from the daily, from the monthly, from the weekly, and to the 4-hour chart. We are going to be getting onto. So let's move. Alright, so I'm going to start with gold. This is gold. XAUUSD is gold. I will just very much clean up these levels to make you understand the reason why I have them. Let me just clean them all up. This is very much going to show you why it's nice to always go from the higher time frame. So like I said, this is 3 months time frame. You see, as you can see, this is 3 months. There I use TradingView to analyze the market. So you need it on your system. TradingView is more understandable when compared to MT5 is where I place my trades, but TradingView, as you can see, is very neat. It's still the same thing with MT5, just like I like the interface, the way it's structured. You can do anything you want. So on the weekly chart, on the this is 3 months time frame. On this 3 month time frame, like I said, every time frame, any candle you see there represents that month. So this full month, this full candle represents January to March. This one represents 3 months. This one candle represents a 3 month worth of trading. So if I should go to my monthly time frame, likewise, each candle represents a month. This candle now represents a month. This is February, as you can see down here. This is February, and this is March that we just entered. So until this candle close, we don't know whether it might start going up or down. But until then, let's analyze how do I enter the market. Let's go back to 3 months time frame to see very much the bigger picture. Here, if you see here, how do I know that this market is up? As you can see, you don't need anybody to tell you that this market is going up. It is very much bullish. As you can see, it is very much bullish, and this is a very bigger time frame. This is a 3 months time frame. As you can see, if I should bring out my trend line, as you can see, it's very much bullish. It's very much bullish. It's very much bullish. Now, my key levels are, this was a resistance level before. This here was a major resistance. As you can see, the market touched here, it came back down. It touched here, it came back down. And this was a touch. Once you see a third touch of, let's say, a trend line or a resistance or a support, the third touch always breaks it out. Once you see one touch, second touch, this third will either break above it or push it down. So whenever you're mapping your level, always look left and always try to observe how many touch of that trend have the markets reached. You count it, and remember, this is the higher time frame. So this is the first touch, second touch, and the third touch. And what happened? Look, boom, it broke out and is now trading above it. So now, like I said, since this was a resistance, once you break out of the ceiling, it becomes a support. It's now supporting this trend. It broke out and is now a support. It's as simple as that. If I go to the monthly time frame, as you can see, the third touch, look at it, 1, 2, and 3, and look what happened here. It broke out and it became what? A support. This level is becoming a support. Now, see, when it became a support, I still looked and observed that there was also a resistance above here. When I go to the weekly time frame, you see why I call this a resistance. This was a resistance. This was a minor support, a very minor support. However, it has broken above it. It has closed with a monthly candle. It broke out last month and is now trading above it, trying to tell us that price is very much coming to this level, to 3K. This is where price is coming to next. When it gets here, it will make another leg. Let me clone this. To make another leg to here, because gold always like to fulfill random numbers. Whenever it breaks out of any level, when it broke out of this price, 2,000 per ounce, now it's going to 3,000. Whenever it closes, it's going to 3,500, just like that, until it gets to any price it's going to. So like I said, this is a very much uptrend from the bigger time frame. It is very unwise. In fact, it's stupid to trade against the general trend. This general trend from the higher time frame is very much telling you that this market is bullish. Bullish means it's going up. Bearish means it's going down. So men looking at this, if you go to the 4-hour using my own strategy, you should be looking for buy positions. Whenever you go to the 4-hour time frame, all you should be interested in is buy opportunities. You're looking for any good setup. You wait for trend line to come to you, you wait for the market to relax, then you start buying, because the overall trend is telling you I'm buying, I'm going up. So there is no need for you to sell, because if you sell, you get stopped out. Whenever you sell, and remember, you are doing all this on a lower time frame, not on a bigger time frame. So if I should go to my weekly time frame, yeah, this was it. When market tested here, it bounced back, then it broke it. This is, all these candles represents weekly. One of these candles represents a week trading. This candle represents a whole week. Remember, this is a weekly time frame. So each candle here on a weekly time frame represents the trading session of the whole week. This candle that closed was the whole of last week, from Monday to Friday. From Monday through Friday was the whole of this candle. And that last week, gold was very much knifing down to come and test this level. This is where it came out to take some buy orders again to the upside. Like I said, since we've already come to agreement that this pair is very much bullish, it will be very, very unwise for you to start selling gold, knowing fully well that it's now trading above this resistance that it has broken. Now this resistance is now a support. As you can see, it's broke above it. Now look at another resistance that is coming to test. Is this price 3K per ounce? This is where it's coming to test. Whenever it gets here, it either get here, reach here, take some sell orders and knife down again, or it could get here, break above it and keep going higher. One or two things can happen. So the best thing you can do is to be on the safer side. Is whenever you go to the lower time frame, you want to look for buy opportunities. You want to start buy. You don't want to start selling, because the moment you start selling, you are going to get stopped out at least 70% of the time. But if you are buying, you are sure to be on a safer trend, especially if you're not using a very tight stop loss, because this is good and the spreads are very much wild. It's just like when you are trading BTC, you know that these pairs are very volatile, so you need a very nice stop loss. That's why my pattern of trading very much accommodates this kind of pairs, because you are not trading to close it today, you are trading to hold it for days. So I'll give you example of what I mean when I go to the daily time frame. So on this weekly time frame, it has broken above it. When it broke above it, I started trading last. When it broke above, that was January, when I saw this breakout. I started buying from here, then it got here, I took some partials, then I left this trade. I closed my position when I started seeing this red candle, and I closed my position to break even. So if I should go to my daily time frame, easy, it's very easy. Now, like I said, last month when I saw this breakout, I waited for a bearish candle. This is a daily, and each of these candle represents a daily trading session. Remember how we started from 3 months, a month, a week, and now we're in a day. Like now, look at this was yesterday, 3rd March. If you see my screen, this is 3rd March yesterday. This represents the whole trading day, and today again is 4th, so it's going to represent a whole trading day. And this pair is telling me that okay, it's trying to rally back up since it has touched down this level to pick some buy orders. I know that this pair is very much bullish. The only thing that can make me start selling gold is when I see a full daily candle close below this resistance, thereby breaking this support and turning it into a resistance again. This is where I want to start selling to this trend line. However, that is not happening anytime soon. For now, my bias on gold is very much bullish. So this is it. When I entered here last month, I saw this breakout, then I started buying from here. It got here, tested it again, like this was a pullback, continue, because I said the trend goes like a wave, higher high, higher low, to come down, to go up again, to come down until it gets to where it's going to. Likewise, this is higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, low. Now you made a lower low, thereby this was when I got out of this room. When I saw this candle, it's supposed to make a higher high, but it failed to make a higher high. Instead, it made a higher low. This low, this high was very much the same with this. So when I saw this candle close, then the next day I saw this candle, I said okay, it's time to close out my position. I closed my position, I took my partials along this level. Then remember, I entered here and I took my partials here. Still, I had something to take home. It's as simple as that. Then I waited. I didn't start selling because I saw this sell orders. I waited for gold to very much come down to maybe closer to this resistance or a little bit shy above it. I knew when I saw this spike, when I saw this bearish candle and some bullish orders coming up to take it back up, I said okay, buyers are now inside the market. Then this was a kind of bullish. This looks like a bullish engulfing to me, telling me that okay, it's time to start buying. And now I bought gold again today, and I moved my stop loss just below here. Remember, this is a daily time frame. My stop loss is resting here, and my overall target is this. Now this is very much how I trade. Like I said, I have resistance, minor resistance, and minor support. Since it failed to knife down to this level, I know that okay, it's time to start buying gold all over again. Then I scale down to the 4-hour chart. This was where I entered yesterday. On the 4-hour chart, after I saw these retracements, this was, like I said, this is lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then it made an equal high. This high is a bit greater than this high. Remember, this is a 4-hour time frame, so all this candle represents a 4-hour trading day. So today is Tuesday. Started here, 1 4-hour, 2 after every 4-hour, 3 after every 4-hour, 4. So all these are today's market trend. So until it closes, we're going to know that all these 4 hours represents a daily. You know how many 4 hours do you need in a day? Do you have in a day to make one day? This is what these 4 hours candle represents. So when I saw this, I saw that it has made a higher high that is greater than this low. I knew that okay, it's time to start buying. That was yesterday. I waited for a confirmation. I waited for this retracement, and I started buying here. I entered this position here, and now I think I'm on break even. I've taken some partials. I think my stop loss is very much relaxed here. Let me tell you, I entered from here. This was how I entered. When I saw this higher high, higher low, higher high, I waited for a higher low. Then I placed an entry here. My stop loss here, and this is my overall target as of now. As I speak to you, I have an open position on this trend. This is it. This is on a daily, this is on a 4-hour time frame. So my overall, I think, is here. My stop loss was here before. My overall target was here. Yes, same with this. Then this was my where I took some partials. When I saw this market rally to this point, I took some partials. I closed out half of the position. I moved my stop loss from here. My stop loss was here, and I moved it from here to this point. It was here. My stop loss is here now. Yeah, because I just checked. My stop loss is resting here. Now this market is making higher high, higher low, higher high, higher low, higher high, higher low. After this low, where I'm supposed to see a new high. But if I fail to see a new high, then this will signal and tell me that oh, this position is no longer feasible, that the market either want to pull back to this level or come back here to take some buy orders. So whichever one, my fingers are crossed. This is very much how I trade. Now I have this position open, and I'm planning to hold it for the next 5 to 6 days with my stop loss. I've taken some partials, entered here, my stop loss here, and I moved it to this point. I still have some profits here. So until I see this, I see a 4-hour candle close below here, then I'll know that okay, it's time to close out and take some little things I have. So it's very much simple. The analysis is very much simple to understand. The stop down analysis from the higher time frame down to the lower time frame, where you pick your entry, close your TP, close your PC, and go do something else. You don't need to be in front of your screen. Being in front of the screen doesn't change the fact that the trend is going. You don't have anything. You can't change the trend. All you have to do is to follow where the market is going. And gold is very much bullish at the moment. It's still very much bullish until I see it breaking below this support. Then I will say okay, my bias is going to be bearish. So stay tuned for other series on top down analysis, multiple time frame analysis, and support and resistance trading, and shall see you on the inside. Peace.